Hi, I'm Mike Elliott, and you're watching the Cannabis Financial Network. Today, we're joined by Daniel Kriznic, Chairman and CEO of Invictus MD Strategies. Invictus MD targets companies with proven brands, strong customer focus, and significant growth potential. They trade under the ticker IVITF. Good morning, Dan. Thanks for joining us.
Good morning. Thank you for having me.
For those of our viewers not familiar with Invictus MD Strategies, can you please give us a brief overview of the company?
Yeah, so we started Invictus in 2014 in December, basically to go after assets within the cannabis space. We look for management that's capable and has the expertise to actually grow and build out their strategic vision and execute on their business plan. And then we provide some of our expertise and capital from various different sources in order to assist them in meeting their overall objectives.
And you've had plenty of news and developments lately. So let's start with your Future Harvest acquisition, the growth that company's experienced since you've been involved, and the dividend Invictus recently distributed to shareholders as a result of the deal. Can you talk about that a bit?
Absolutely. Future Harvest is our core cash flowing producing asset right now. We acquired that back in March of 2015. It was one of the assets that we acquired a minority interest. We had a 20% interest at the start, and then today we own 82.5% of it. So we kind of scaled up throughout the months and about a year and a half. And at the time that we acquired it, it had three main divisions. It had a fertilizer division under Plant Life Products. It had a lighting division under Sunblaster, and it had a metering division called NutriDip. And during the number of months that we started going through it, we kind of implemented some of our customer relationship management to increase the sales. We also looked at different things like freight costs and try to reduce that to be more cost efficient. And then through the months, we got approached by a very strategic buyer out of Northern California who wanted to buy our Sunblaster line. And it was one of those deals that we couldn't really refuse. It was something that we acquired for around $900,000, that division. We sold it for just under $5 million. And because of that return, it represented about 315% return on investment. We looked at what we had in the bank and what we are as a company and what we've always strived to do, which is provide a return to our shareholders. So we decided to pay $1 million dividend. Now, I don't think there's any other cannabis companies out there that have paid a dividend yet. And at that time, we had about 14 million shares outstanding. So that dividend represented about 7 cents per share, which was about a 17.5% dividend yield. So quite accretive and value to our shareholders. And that's something that we wanted to do to give back as a result of that sale.
And so, Dan, you've been able to prove the acquisition model with excellent results. In the last month alone, you've closed on partial ownership of a British Columbia testing lab and a Las Vegas cultivator, while announcing intentions to acquire a Canadian licensed producer and a Washington cultivator. What can you tell us about more recently announced deals?
Yeah, definitely. We've been very, very busy over the last number of months. The window of opportunity within the cannabis space is opened again. Capital is flowing into various different companies. We were able to look at the labs in Kelowna, British Columbia. It's a lab that hasn't been licensed fully yet, but is under Health Canada review. And once it has been fully licensed, we'll be able to get 49% of that lab. And then within the U.S., we're also looking at various assets because of the increased number of companies that are coming online there. Change in regulation is becoming very beneficial. So we were able to secure an option on a soon-to-be Nevada license. They're in final inspection there as well. So we expect that within the first quarter of this year. That license right now, we've got an option to acquire first 10% and then up to 60%. So quite pleased about that, just given the more recent recreational ballot that passed in Nevada. And then within Washington State, we've got an option that we're working through right now. It's a signed binding letter of intent, so we haven't finalized the definitive yet, but we'll be working with Washington on an equipment lease, and ultimately when they allow foreign ownership, we will have 20% of that cultivation license. The bigger item that we recently acquired, which you mentioned there, was a licensed producer under the ACMPR. It's one of the 36 licenses. We're very proud that we were able to get 1/3 acquisition of this license. The individual is out in Hamilton, Ontario. The building is about 16,000 square feet. It operates the name AB Laboratories. And we're also very close on acquiring a 100-acre parcel that is right near the property for the expansion plan. So definitely looking at the footprint within Canada and the US. Very focused on the Canadian landscape because we can see the demand there. So we continuously look for other acquisition opportunities, and there's definitely more to come.
And you also recently announced closing of a $12 million round of financing. Talk to us about the financing and how it enables your corporate development.
Yes, the financing was key to actually acquiring AB Laboratories. So since we raised the $12 million, we actually deployed about $7 million already towards AB Laboratories, and we're going to be deploying another $2 million over the next 90 days. And then we're committing another $5.5 million towards that expansion project on the 100 acres. So we're definitely far down the path of utilizing some of that capital. When we went out to raise that capital, it was done in a very short period of time. It was from start to finish $12 million raised in 6 days with about 120 placees. So we're pretty proud of the kind of turnaround that we can do with our capital raising abilities. And we still have about $4.5 million in the bank, and we'll be utilizing that for other acquisition opportunities as well as working capital.
And Dan, that's all the questions we had for today. Anything else you'd like to tell investors before we close?
Well, I think just in general, the industry, we're at a time right now that doesn't come too often, maybe only once in a lifetime. When you look at cannabis and what's happened in terms of it's been banned as a substance for over almost a century now, there's great benefits in terms of medical applications. You see children with epilepsy getting better as a result of using, whether it's certain products or high CBD or THC and the whole entourage effect. And it's something that we can't turn a blind eye. We're continuously looking at new ways, and the R&D that's been happening in more recent years, let's say 5-10 years, if we can continue with that research and we can continue down the path with Invictus and providing whether it's product and expertise and capital and really deploying that within this space, I think it's a great opportunity to invest in companies like Invictus, find companies like Invictus that are still very kind of low in terms of market cap and have a lot of room for growth. So I think at the end of the day, I look at it's about shareholders and creating shareholder value, and this is a real opportunity that doesn't come on too often.
Well, Dan, thanks again for taking the time to be on the show, and we hope to catch up with you again soon.
Great. Thank you for having me.
We've been talking to Mr. Daniel Kriznic, Chairman and CEO of Invictus MD Strategies. Invictus MD targets companies with proven brands, strong customer focus, and significant growth potential. They trade under the ticker IVITF, and you can find out more about them by visiting their website at www.invictus-md.com. Thanks for watching the Cannabis Financial Network.